What's going on, everybody? It's July 13th, 2021. I'm going to talk about gold today. Going to talk about CPI data that came out this morning. We traded that live in the accelerator, got a great trade on GJ, and we have so much data this week. I talked about it Sunday, so let's get right into it. But more than anything, I want to talk about gold a little bit because I've been getting a lot of messages like, hey, why aren't you sending gold signals? What's your gold analysis? And today is a good reason why I haven't been doing that. So this is the data that came out this morning. You can see this is the forecast with CPI, which is short for Consumer Price Index. Okay, so this means how much are consumers, which more than likely are me and you, on goods, things that we're buying, gasoline. I don't even know. I'm not sure if gasoline and lumber is in there, but groceries, that kind of thing, cars, like goods that you buy at the store, right? So what is the rate of inflation based on that? Like, are we paying the same thing we were last month? Or are we paying the same thing we were 2 months before? And so this is what I didn't mean to tell you exactly. I didn't mean for this video to be exactly what this is about, but I went into this in a lot of detail on our accelerated live call this morning. So last month, the forecast was 0.4% higher than previous. Here we are, 0.6% was the actual number. So each month here, you can see we've been going up in prices. Okay, so it says here, actual greater than forecast is good for currency. That's kind of a broad statement, but it's not a good thing. So like, if you see this and you're like, oh wow, good stuff's happening, it's not really the case, because that means that inflation is getting higher and it's increasing. So here we are, 0.6. We're forecasted at a deposit right there, but you can see we have a steady rise in inflation, and it was forecasted to actually go down this month. And what happened? It definitely didn't go down. You could see here, this is a pretty big jump. This is a decent jump. March, we were at the same. February, we were at the same. January, we had January, we had our election, or whatever you want to call it, right? So this is the same. Slightly higher in December, lower right here. It was pretty balanced out, right? So that's would be in more healthy economy, typically what you'd want to see. So if we're just looking at inflation as a bad thing, which I think it is, and I think most people would agree with that. So anyways, here's the forecast, almost double what was forecasted to happen today. So we got some big moves right off the bat there. See how that looked at markets. And if we're looking at talking about inflation, gold is one of the number one things to look at when you're talking about that, right? So this is the initial 7:30. We got the candle drop here, the data drop. Boom, we had a nice, huge move to the downside. And you can see on GJ, which we caught today, we're in a buy. This is from New York session. Literally zero drawdown on this trade, minus like 3 pips. Okay. So, but here we were, 152.55. But if you were in our accelerator call, we got in here down 152.45, 46 is where I entered this trade. Because a lot of times when I send signals, it's going too fast, for one, and we're also trading those live. So do my best to get it all out there. But you can see we had that big number, and I was thinking we would get a lot more risk off. You can see the effect on the NASDAQ here, just huge push. Inflation's not good for markets, that's for sure. Dow survived a little bit better than the NAS, hung in there. There's NAS, and here's the S&P 500. So now, why wasn't there a bigger sell-off than you would think? Because man, we had this move lower in gold, and then look how fast this is bought back up. So a couple of people in my DMs were like, man, you haven't done a gold video in a while. You haven't been sending gold signals. And the reason is because this becomes super hard to trade, and it's just ranging back and forth. So if you are just taking these tops and bottoms, that could be a good trade. But obviously there's a lot of these pushes higher, stop out moves. You can see this got played both ways today, the way we wicked out here, and now we're just going sideways. And the reason we're going sideways is because we have more data to come, and this is tomorrow PPI. Okay, and so I'll talk about this. I'll talk about it in more detail in the accelerator call with that group. But this is the change in price finished goods sold by producers. Today was consumer index. Tomorrow's producer index. This is also going to measure inflation, because if price of goods go up, if we're paying more, that means that the producers are charging more. So this is a measure of how much more they're charging. And then right on top of that, we have Bank of Canada. Right after that, in the afternoon, Fed Chair Powell. And so he's going to be talking about inflation. It's going to be the number one topic. Of course, people are going to potentially, the Fed at least, downplay what's going on. But now you can see New Zealand has CPI. This will be interesting. But Powell is testifying 2 days in a row, and Wednesday, Thursday, and then Friday we have retail sales. So what this is how much we are, as consumer, essentially spending. How much are we shopping? Retail sales. Change in total value of the sales at a retail level. So you can see here, it's been going down. So what does this mean? That means it's significantly higher here. That's probably because there's some stimulus checks that went out there. That's not going to last forever, and it cannot prop up this economy the way it's going, because inflation's happening. There's nothing to back it up, and the Federal Reserve is going to have to raise interest rates to combat this inflation. And so what's that going to do? All the people that got loans, all the people that were encouraged to shop to boost the economy up, so they bought things they couldn't afford, housing through the roof. It could mean some serious trouble if interest rates on those loans go up and people can't afford them. So, but the best thing you can do as a trader is do it now. Learn how to do this. Go out, get funded, and then you actually have some protection against what's going on out there. If you want me to help you do that, we have an amazing group in our accelerator. And by the way, I did want to add here my system as well that I use to trade. Let's see. There it is. There was a Telegram group. I think it has Elite Chat if you wanted to have a peek in there. The Momentum Range Finder, the indicator that I made, is now 50% off. So it's only $97. So take advantage of that. You can find the links in my Telegram. And yeah, so $97. This measures momentum and volume. Super effective. I use it on all the trades I sent out to my group. So take advantage of it while you still can at 50% off, $97. So thanks for watching this video. Appreciate you. Be careful trading tomorrow, or even stay out and watch the fireworks. And I'll see you in the VIP chat, or hopefully on one of the live calls in the accelerator if you're ready to get to that next level. Peace.